Hello, everyone. My name is Deepak, and I'm a tax code advisor. Today, I'll be taking a look at Pittsburg, California. It's a town maybe about an hour and a half away from Fremont. In traffic, I guess probably takes 2.5 hours. But a very interesting town. I found a lot of interesting data in there. Those of you guys who are thinking about perhaps investing for short-term rental or long-term rental, then maybe you'll find this area very, very interesting because it's a beautiful town and the average home price right now, as of October 2024, in that area is $580,000. And and I'm going to cover a lot of different stats that you're going to find extremely helpful in making a decision if you want to, consider something in this market or not. But once again, trends can change very, very quickly. So be careful before you rely on any of this data. Do your own due diligence. Nothing in this video should be considered an investment advice. So please keep that in mind. Once again, my name is Deepak. I run a tax firm called Tax Code Advisors. You can reach out to me via taxcodeadvisors.com. People come to me for dealing with their capital gain problems, with their tax problems, figuring out how they can lower their taxes, figuring out how they can start their business, or structuring their business or their assets that can help them protect those. So all those kind of questions, people always come and ask me how I can help them with that. But one of the things I love to do is study data, because data tells us where the market is going. I love to take a look at trends. I could take a look at what all kind of things are telling us about a particular market. So I share those right here on YouTube, as well as my live seminars. And one of those is coming up, as you guys know, in a couple of weeks. We call it the Wealth Summit, where we spend 12 hours talking about different ways how you can build wealth. We talk about how do you save on taxes. We talk about how do you implement asset protection. How do you deal with your real estate. How do you deal with foreign income and asset reporting. How do you build wealth. How do you protect your wealth. How do you grow your money. All that kind of good stuff. So please, if you haven't registered for that, then please definitely reach out to me, and I can help you get some discounted tickets for that. So once again, my website is taxcodeadvisors.com, and you can just reach out to me that way. So let's take a look at Pittsburgh in a little bit more detail. Like I told you earlier, the median home prices is about $580,000. This is a town that is very right next to it, and we can see the average home price there is $560,000. So pretty, both of these markets are pretty good. So I personally like them very, very much. And I actually spent a few years of my life in that area as well. So I'm very familiar with the area as well. So I'm going to be sharing all kind of details about this market with you today. So let's take a look at the income growth in Pittsburgh, California, because I always like to start out by looking at the history for income. Because if people are not making money in a particular area, then sooner or later the housing prices will come down. So as we can see in this chart, I'm showing you all the way from back in 2006 all the way up to now. In 2009, when the big crash happened in this market, the income for a household there was about $56,000. But as of today, it's almost $100,000. So let's take a look right here, $98,000, and looks like the income is growing by almost 2% every single year. So not bad. If I take a look at, for example, 22 and 23, 4% growth, and before that, almost 10% growth, 21 to 22. Obviously, COVID time, so this data is kind of all messed up. But still, 2% growth for income in that area, and it's almost 98,000 at this point. So not that bad at all. Second thing I like to take a look at is population. Now, population data is usually not current, so depending upon when the census data comes out, so we can't always depend on it. But if we take a look at historically from 2011 to now, population is steadily growing in Pittsburgh. So almost 100,000 people there right now. I would assume as of 2024, there are probably good. I would say at least maybe 5,000 more, so maybe about 105,000. So as long as more people are moving in the city, as well as more people are making more money, those cities tend to be a little bit more stable in housing market. But as we all know, there are many other factors. So let's take a look at some of the other important factors in that area. So I'll take a look at the home ownership rate, meaning what percentage of the properties are actually owned by homeowners and how many are properties are owned by investors. So we can see right now it's about 59%, and it's pretty stable since 2020. It's been about 59 to 58. So still, a little bit, few investors move into this area, but not a whole lot, consistently. And I think that part of the reason behind this, and we need to definitely keep this in mind, is perhaps a lot of people moved into this area, not as an investor, but to buy the property because it's further away from the Bay Area. So perhaps they felt that the prices were a little bit more reasonable here. So they might have moved in this area because of that reason. Um, let's take a look at the age, because that tells us a little bit about the area as well. If people are retiring here or people are working class, what's going on. So we can see the age has been pretty consistent in this area. Average is about 35%. Another key factor I like to look at is what kind of poverty in the area is. Usually areas that have higher poverty rate, they are not good areas, at least for investors oftentimes. So let's take a look at that data, extremely important. And we can see the poverty is actually going down. Back in 2012, for example, we can see almost 18% of the people, almost 15,582 people out of 85,000 were below the poverty line. So almost, 18%. What's interesting is as of 2022, that number has went down to 10%. So I think, uh, you know, people just simply got a lot richer, as we saw the average salary increase from 60,000 to almost $100,000 there. And I think a lot more people moved in the area as well. Um, are they building new homes there? That's important for us to know. What kind of construction activities happening there as well. So we can see that there are definitely more housing units here than before, almost 30,000, 31,000 housing units. So that's pretty good. I like to see this number up. That means there is still opportunity there. That means people are still building new homes, new properties are still becoming available. So obviously 22 during COVID, that number has come down. 21 they increase it by 5%, and then 22 they increase it by almost 2%. The problem here is if we take a look at this number, so new homes that are being added to market is 2%. But if I take a look at their population, we can see that population is actually growing by zero point 0.1. So not bad actually in this case. So sometimes I see the population is growing way faster than the inventory in market. So this one is actually not that bad. So overall, actually demographic wise, if I look at it, this area looks pretty good at this point. All right. So let's go back to some hardcore data and we'll take a look at value versus income ratio of properties in this area, see how they look like. So let me pull that up for you. And we can see that that number is sitting at 5.94. Now, if you know anything about the Bay Area, this number is actually not that bad, honestly. In many areas, I see this number at 8, 9, sometime even higher. And the higher the number is, the worse it is. As we can see, the average would roughly be around 5, little over 5. So it's not that far off. So if somebody says, hey, this area is extremely overvalued, I would probably argue against that, considering how much money people are making. And we can see that as of right now, so we can see in 2024, the typical home price is $579,000. The fair price will be 510. And the reason why that number is important to me is, if market were to crash, uh, and nothing else changes, people are still making the same amount of income, that means, chances of me losing a whole lot of money is very, very slim, because the fair home price will be roughly around 5. Now that's not an exact science, it's just an estimate, so don't depend on that, but it kind of gives us an idea what my downside risk is. I think oftentimes when people are buying property, they don't realize their downside risk, and when we look at some of this data, it kind of makes us understand that. How much money do you really need to be able to afford a house in this market? So let me pull that number up for you so you can take a look. And what I'm going to do Okay, looks like I already have that turned on for you. The average salary you need in this area is about $141,000. And we can see the mortgage payment on that property will be roughly about 3,500 or about $42,000 a year in that market. So the question is, if you're an investor, can you rent the property for a lot more than $42,000? So for that, we would have to look at the vacancy data, and I'll show you that in a second. But look at that. Back in 2021, you could have made only $85,000 and still afford a house. So between 21 to 24, since the interest rate has gone up, we can see the affordability has decreased quite a bit. So that is a little bit of a problem. Let's take a look at the property taxes in the area. How does that compare to some of the other areas in the town? So almost 0.78, so pretty good. Looks like property taxes has been coming down as the taxes in the at the property prices are starting to go up. So pretty good. And this is an interesting one. Let's take a look at this number here as well. That's for buying versus renting. So if I take a look at, for example, back in 23, in September of 23, that was really a bad time to be able to buy it. It's still not really that good of a time. It's still 26% difference. That means it's more expensive to buy than it is to rent. But this is a metric, I guess, if you're an investor, very important for you. But I guess this is important for both, whether you are renting or buying, because you can see that right now renting is cheaper for you. If you were to buy it, you are going to be spending almost $43,000. But if you were to be renting it, you're spending almost $33,000. So you're saving $10,000 a month, and that's a pretty standard case. Pretty much everywhere I look in Bay Area, so it's always there. But can you imagine if you could have bought the property, let's say back in 2021, just during the COVID time? I think that would have been worked out pretty good for you. Let me take a look at some of the market trends, give you a little bit better understanding as to what's happening here. So I will take a look at what kind of inventory is available right now. So that's why I like to take a look at whether they have more homes or less home. How does that look like? Um, so right now there's more inventory, so that's a good thing. We can see that for sale inventory is 97, and the long-term average is about 86 in this market. So a little bit more than what average homes is. That means if you're in the market looking to buy a property, you have a little bit more choices. But I would like to see this number significantly higher, because that would bring the prices down, and it's really good for home buyers, and you get more choices. So, but still, this is not bad. I'll take it. In many areas, that number is just really, really bad. So, considering how things been, this is actually pretty bad, pretty good. How long the properties are sitting on market? If you're thinking about selling a property in this area, it's roughly about 38 right now. And you can see in 22 it was 38. In 2019 it was 38. So it seems like 38 is actually not a bad number. So even if you're thinking about selling it, roughly in about a month and a half, you can sell the property in Pittsburgh market. So not bad at all. The median list price right now, as of October 2024, like I said, is $599,000, almost 600K, which was actually quite higher back in 2021, almost 646. But like I said, in 2020 was pretty good, almost 500K. So from 2022 to 24, in 4 years, the prices has went up almost $100,000 in this area. Once again, compare that to other Bay Area numbers, this is actually not bad at all. So this one is fairly decent. All right. So I think I talked to you about. I gave you some idea here. I think I promised you for the numbers for if you're thinking about investing in this area, right? So let's take a look at it from an investor point of view real quick. What kind of money can you make in a rental market in Pittsburgh? So if I take a look at that right now, the average rent price is 2808. Once again, these are all the averages. So if you have a home that is bigger than an average in your area, those numbers will be a little bit higher, but about almost $2,800. I mean, and my guess is for Pittsburgh area, maybe the average size home is 1,500 square foot. So, 2,800 bucks rent, and your property taxes are low. And this actually, like I said, over long term, maybe this is still not as bad as people think. All right, how many homes are available for rent in that area? Let's see. We can see here. Okay, looks like I don't have how many homes are available for rent right now. I don't have that data. But what this is showing on your screen right now is basically it's taking Zori index. It's issued by Zillow, and then you add about 25% to it because it's looking at the average home price, and then you basically add other 25% because some of the properties are a little bit bigger. So that's the idea behind that. Let's take a look. What percentage of properties are actually, you know, are not being rented. For they've been sitting on the market and not able to rent. Actually, for Pittsburgh, it's down to 3.3%. So we can see back in 2012, 2011, that number was almost 9%. But it looks like the rental market is extremely strong in Pittsburgh right now, 3.31%. So compare that to some of the other places. Actually, it's not bad as well. Rent as a percentage of income, almost 35%, but it's still dropping. So like I said, rent for renters is actually pretty good. Back in 2015, that was almost 45% of the income was going into rental, but right now it's about 35%. Let's take a look at also shadow inventory. That helps a lot. Basically, that means what percentage of homes that are staying vacant or as an absentee owner. Sometimes people buy more than one property and looks like it's almost zero. That means everything is being used. That's pretty good. And if I take a look at the rent growth in that market, we can see that it's almost 2.27%, 5 point this. So it looks like pretty stable growth. There are a couple of years when rent goes down, 3.21, 0.87, 1.5. So a couple, 3 years altogether, and other than consistently rent goes up. So if you think about, if we believe that inflation will come down to 2%, it's not. It hasn't come down to 2%. It's still more than 2%. But if we take a look at the inflation, then this number is at 2.27%. So looks like this can, if I'm really buying something in Pittsburgh for investment, when I want to rent the property to somebody and forget about it, basically that means I'm really buying it for income, not necessarily for growth of my, not for appreciation. Although, as I said earlier, there are pretty decent size appreciation in the area, so we can see that. And since 2015, the market has been overvalued, but that's pretty much everywhere. So it's not. But the good thing is, you see the difference between these two numbers is not that big. So I still feel pretty comfortable about this area. So overall, I think I like the Pittsburgh market. So if you're looking to acquire a property there, it might not necessarily be a bad thing right now. So I hope this helps you. But if you're thinking about investing into real estate, you're thinking about buying a new property, or maybe for short-term rental, long-term rental, or mid-term rental, and you would like to get an extra set of eyes on data without having someone who has a reason to be involved in a transaction, then please give me a call. My name is Deepak, and I run a tax firm called Tax Code Advisors. Tax Code Advisors, but my website is taxcodeadvisors.com. I help clients solve their tax problems, but I love the numbers. I love studying the markets. I love studying finance, so I can always dig a little bit deeper into it and provide you more information that you can use to make your decisions. I think the more information you have, the better it is. But this is information that you see in Pittsburgh market is as of October 2024 that I have showed you. So if you're thinking about doing something there, I think you can use this information and hopefully you'll find it helpful. But please do leave me your comments, share your thoughts. If you have some ideas, maybe you are a realtor in Pittsburgh, California, or you're a homeowner there, or maybe a renter there, and you have an opinion about that, definitely leave it here. And if there's anything I can help you with taxes, then definitely don't hesitate to reach out to me. Just go to taxcodeadvisors.com and you can set up a free complimentary appointment with me. Talk to you soon. Bye bye.